Good morning this Tuesday, the 7th of January. I'm Grady Wolf, market analyst with Belderant. Wall Street started the new trading week in mostly positive territory as chip stocks boosted the S&P 500 and Nasdaq higher with gains of 0.55% and 1.24% respectively, while the Dow Jones lagged the market with a fall of 0.06% on Monday. Market optimism about tech stocks and the earnings growth potential remains elevated, which continues to fuel strong tailwinds for the sector. Over in Europe, on Monday, markets closed higher amid reports Trump's team is considering a plan to impose tariffs on all countries, but only on critical imports. The STOXX 600 rose 0.94%, Germany's DAX added 1.56%, the French CAC climbed 2.24%, and in the UK, the FTSE 100 ended the day up 0.31%. Across Asia on Monday, markets closed mostly lower as investors digested business activity data and key economic data out in specific regions. China's Caixin Services PMI index from S&P Global rose to 52.2 in December, the fastest expansion since May last year. Despite this, China's central bank said over the weekend it would implement a moderately loose monetary policy in 2025. China's CSI index fell 0.16% on Monday. Hong Kong's Seng lost almost 0.5%, and South Korea's Kospi index rose 1.91%. Locally, the ASX raced out of the gates on Monday morning with a strong rally on the back of Wall Street's strength on Friday before pulling back in afternoon trade to close just 0.08% higher as the miners weighed on market gains despite the tech sector posting a 0.8% rise. The iron ore mining giants came under pressure yesterday amid a decline in the price of iron ore to below $100 a ton. Singapore's iron ore futures contracts, falling below $100 a ton, were the key driver of the spot price decline yesterday as traders exit amid easing demand for the commodity. DroneShield fell over 1.5% on Monday despite the counter-drone technology producer announcing a $9.7 million order from a major military customer in Latin America, while Gold Road Resources rose 1.2% after reporting record quarterly production at the 50% owned Gruyere project with 91,631 ounces of gold produced during the December quarter, which is significantly above the 68,781 ounces produced in the September quarter. Insignia Financial shares soared over 14% yesterday and led the ASX 200 gains to a 3-year high for Insignia Financial share price after the superannuation company announced it had received a $2.87 billion takeover bid from US-based investment manager CC Capital Partners, which trumps the former takeover offer of $2.67 billion from Bain Capital. The deal would provide CC Capital with access to and market share into Australia's estimated $4.1 trillion superannuation market, which is considered to be the 4th largest in the world. On the commodities front this morning, oil is trading 0.67% lower at $73.47 a barrel. Gold is down just 0.06% at $2,636 an ounce, and iron ore has further weakened to trade down at 1.16% at $99.44 a tonne. The Australian dollar is buying 62.41 US cents, 98.44 Japanese yen, 50.09 British pence, and 1 New Zealand dollar and 11 cents. Ahead of Tuesday's trading session here in Australia on the ASX, the SPI futures are anticipating the local market will open the day up 0.15%, extending on the positive finish from yesterday. And now let's dive into some trading ideas for your consideration today. Trading Central has identified a bullish signal on Macquarie Group following the formation of a pattern over a period of 70 days, which is roughly the same amount of time the share price may rise from the close of $224.47 a share to the range of $243 to $248, according to standard principles of technical analysis. And Trading Central has also identified a bearish signal on Australian ethical investment following the formation of a pattern over a period of 38 days, which is roughly the same amount of time the share price may fall from the close of $5.15 to the range of $4.25 to $4.45, according to standard principles of technical analysis. And that's all for this Tuesday. Have a wonderful day and happy investing.